Gentlemen, welcome to all of you. Jay, I'm going to kick this off with you.
Sure.
Man, did we have a market rebound on Friday.
Yeah.
How does that set us up this week?
Well, we're not doing anything to start the week, but that was, one, in the tech side, it was a relief rally. That was what we needed. We were a little oversold, especially on the software side of things. And then you look at what's leading this market. You look at what led the Dow. The Dow, a third of it made new highs just on Friday. This rotational theme continues. I think the bifurcation story is one to watch because if tech continues this downward sludge, we will see more of a washout in the overall market. But when you have stocks like Coke leading, it's not making big headlines, but this rotation is the theme, and it's something to watch. 17% of the S&P 500 made new highs just on Friday. That's usually a very positive thing. We just need tech to stop going down, maybe stabilize a little bit, and I think new highs are going to continue for a little while longer.
Okay, Doug, boring is exciting.
Yeah, super exciting. Everyone's looking at U.S. stocks here, large cap particularly. Look at mid caps, look at small caps, look at developed international, look at emerging markets. These are all having a really strong start here, coming off, especially on the international piece, an amazing 2025. So if you're diversified, holding your portfolio, you're looking great.
All right. Alex, what say you about what we've seen in tech, especially with more earnings on deck this week?
I think we're actually in the middle of a period of volatility around tech stocks. There is a belief that AI is going to work, but the market doesn't really have an idea of where it's going to work. And that mirrors exactly what's happening in the tech industry. You speak to people within this AI build-out, they don't know if the winner is going to be the chip companies, the foundational model companies, the application companies, the consultants, somebody else. And so the market will look at every bit of these earnings results and then take wild swings and big guesses based off of what it sees and determines what might happen in 2 or 3 years, which if you speak with anybody in the middle of this, they'll tell you is somewhat impossible. So I think we're seeing that now. We go from maybe there's a bubble to now AI is going to work so well that it's time to sell off software. I just think this is the environment we're going to be in over the next year or longer as this all shakes out.
Yeah, IGV, to go back to what you just said, Jay, 6-year lows relative to the S&P 500 software sludge. Is that the term you just used on this?
Yeah, a little sassy is another way of looking at it. But the IGV, I know, right? The IGV, a little oversold. From a trading point of view, I would try to nibble here. We've got 3 big components of it, AppLove and Unity Software and Datadog reporting this week. Let's see if they can stabilize. But any rally, it could be fast, it could be furious, but I don't know if it's going to be sustainable. But as a trader, I think we are at a good risk-reward entry point for a quick swing trade. So I nibbled on Friday, and I'll probably buy a little bit down to 77. It breaks 75. As a technician, I'll be extremely concerned, but and it'll become a long-term trade. But I think IGV, it's time to put a little to work. This sell-off has been overdone.
Doug, we had a guest on earlier today, made a really interesting point, and that was, if Anthropic and OpenAI and all of these players were actually already public and we're expecting IPOs potentially before the end of the year, that the software ETFs would be looking very different right now.
Yeah, I mean, those would be big players in the space here right now. But what I look at is, do we have discounts today on any of the software players that we can hold on to for the long term? And we're seeing some of those discounts out there. Very difficult to buy the dips on the S&P 500. Happens too fast the other way. But you do have meaningful discounts across the software and technology space right now. So if you're a long-term holder, maybe you can scoop up some of those shares.
Alex, one of my favorite reports this weekend came from the Wall Street Journal, where they broke down as a percentage of GDP how much the AI capex equation is, just from the 4 big publicly traded players. More than the Apollo Moon program. More, I think the only thing that topped it was Louisiana Purchase, which tells us what about how this is factoring into economy?
Yeah, I always joke that if the AI was sentient or all-powerful and commanded humanity to feed it, we wouldn't be doing something much different from what we're doing right now. We have more than 600 billion coming into capex from the tech giants right now. And I think that just underscores this belief within tech that AI has a pretty good chance to be a transformative technology. You think back to the dot-com moment, and there was lots of questions back then about whether it would be transformative, and it took a couple of years to shake out. But the people who were watching that, they were living through history. And I think the same might be happening now. So every tech company, think about Amazon. Does Amazon sell on a website or does it sell through a chatbot in a couple of years? If it thinks there's a good chance that it's going to sell through a chatbot or an AI agent, it has to invest. And so it didn't surprise me to see Amazon's capex go up. I just think it took the market by surprise that it went up by so much at a 50 billion over expected. And this is the environment we're just going to be in over the next little bit as these companies make these bets.
Yeah. Speaking of more spending, Japan. You guys watching this closely?
Yeah.
All right. Doug?
Crazy
thoughts?
futures during the Super Bowl, like 6%. We'll see how that flows into the rest of the market.
Yeah, as a technician breaking out, it's getting a little overextended, but leadership change, they liked it, and we'll see what ramifications it has for our market. We didn't get really much of a tailwind from it, so we'll just wait and see.
If I stay in Asia here for a minute, there's also reports overnight that China is potentially curbing some institutions buying, and we don't know the details, and we don't know when, and we don't know what it looks like, but of U.S. bonds. How is that factoring into the bond equation right now, what we're seeing with treasuries?
Well, right now we're kind of trying to digest that. When I woke up, we were rallying, and then this news kind of hit us a little hard. Let's see how the Trump administration reacts, what kind of pushback we get from, that aspect of things, and if it escalates into another trade war. What we've seen when we do have issues on the trade front with China is extreme volatility in this market, and right now it's not what we need.
Yeah, and of course we have the leaders expected to meet in April. The other piece of this is metals. And obviously, you've had the conversation about silver specifically being meme-tastic here, but even just the pile-in we've seen in gold, and we've had reports overnight, too, about buying by central banks and others where gold is concerned. So how does that factor in, especially if you're diversifying away from bonds?
Yeah, so you see this flight to hard assets here. What's interesting to me is like the digital component of it is not following through on that. That's Bitcoin here. You have this rush into precious metals. It's crazy. That price action's pretty wild, and you could have gotten pretty hurt if you were buying into that massive rally to the upside. Kind of shocking that it's still holding its own, specifically gold, silver, coming down quite a bit off the top.
Yeah, Alex, also on tap, we get an inflation report today, this week, excuse me. We also get a jobs report, slightly delayed jobs report as well. So when we talk about AI, there's an inflationary piece of this too. When you speak to companies that say that they can't get enough workers right now and wages are on the rise and the costs of actually building out all of this compute is on the rise too, on one hand. On the other hand, a lot of focus on what it does to the broader job market.
Right, and AI can have this inflationary, deflationary effect. Inflationary in the short term, like you mentioned, you could see a run on workers, you could see a run on materials. Deflationary, maybe it just makes everything more efficient, everything runs a little bit cheaper, and you don't have to spend as much money. So that's sort of the equation with AI.
Okay, we got 20 seconds left. What matters more, jobs or inflation?
Inflation.
Go with jobs.
All right.